The Okanagan's highest price home just sold last week for $17.5 million. Breaking that down in today's uncertain terms, we're looking at the Kelowna's real estate market and the potential impact that the interest rate drops might have on the housing and the housing prices in Kelowna. I know I'm a real estate agent. Obviously, you're going to assume I'm biased and I think home prices are going to go up. I don't necessarily think that. I do think Kelowna is in a unique position compared to other markets in Canada. Break it down in this video and in future videos on why I believe in Kelowna, why I don't think the home prices are going to go down. And big news coming out of some reports from the city of Kelowna that we can maybe expect a little bit more. We can expect a relaxation on the short-term rentals and what this means to Kelowna's real estate market heading into next spring, because short-term rentals might be coming back. I was very careful and looked and breaking down the wording from Tom Dias and what the city of Kelowna is maybe looking to do. We're going to get a report in the future, but this is something you want to be watching as we move into spring of next year and where to focus your time. So if you do want to, if you're looking to get into investments, maybe you're looking at a short-term rental opportunity right now in Kelowna, I've got a number of good plays on that. But I also will give you a list of where to look. Comment to me short-term rentals, and I will get you a list of all the buildings that allow short-term rentals, and so you'll be ready to strike once it's announced. Now we're looking at the hot sheet here, filming it on Monday, September 22nd, and we're going to break it down. But I am filming it a little bit earlier in the day than normally I do. So this numbers might not be fully reflected. We had 85 total sales. Might have had some sales popping, come over either late Friday, over the weekend, just haven't been reported yet. So we'll continue to watch that. But sales at 85 in the last week, down about 10 to 15, what we've been kind of seeing on a weekly basis. We did have the interest rate drop there, so we're going to monitor and see what's going to be happening in the next couple of weeks. As we get into October, we're going to maybe, if we start to see that increase there, that means the rate reductions are having an impact. And our new rate information coming out of it is we're 40% likely to get another rate drop in October. And if you look at that, another 100%, they're predicting by the end of the year. So even if it's not in October, there's good news coming for home buyers or mortgage holders with variable rates that we might see another rate drop. RBC is actually cautioning Bank of Canada and thinking that home prices might increase, right? So that's what they're focusing on. And we're going to touch on that in the article section where we're breaking down 3 different articles in the real estate market. We'll get into that a little bit later in this video. We're looking at the week in review, Real Estate Weekly, 230 new active listings. A lot of that is going to be part of the cancellations and withdrawals and expired listings we're seeing here. So we had 150 come off the market in this last week and 230 hit the market. We're starting to see price decreases continue, 171 price decreases. So sellers are really trying to find that happy medium in the marketplace. When you look at the sold on the market, there's some confidence in the marketplace. I mean, we had the Okanagan's highest sale that we've ever had. It sold 15 days. This property in Cars Landing for $17.5 million after being listed for just under $21 million. So that was a huge congratulations to the Marshall team as well as to TJ. You guys did well with that sale and it happened quick. Great property, 19 acres in Lake Country area. Included some buildings, about 10,000 square feet, just under 10,000 square feet worth of buildings on it. Waterfront acreage. Going to be likely some commercial play where you maybe have some tourism play. House, nothing spectacular there. You can see the cedar shake roof there. Not really fire resistant in today's market, but when you're waterfront, I guess you don't really need to have that fire resistant roofing on it. But maybe it was included in a part of the purchase price there. But definitely beautiful property, spectacular property. So congratulations to all those involved in that one. And that just shows the confidence right now in the real estate market, despite people are willing to spend $17 million in Lake Country to be able to make that happen. And that's an all-time high. I mean, look, we also had on Shaler Place $5 million sale. We also had 4 other ones over $1,500,000. So we're seeing lots of activity, not a huge amount of activity, but we're starting to see stuff sell. I mean, there was a total of 17 sales in the last week over $1 million. So looking at that average price point right now for single family homes, $1 million. So starting to see some of that, but some of the activity is selling below that million. Great opportunities right now to get in the marketplace and try and make some sale happen on it. The next announcement was from our BC government, and another additional supply equation coming to it. So BC is increasing density in a number of different cities. And I'm all for adding supply to the market. That is our issue right now. We are seeing some issues, I think, on the forefront of some of these smaller communities that are being forced to have these mandates to hit these numbers. I feel like some of these cities and the province is we can't hit these targets that they're setting out for this for a number of different reasons. Part of it is, and we'll get into it in another video, but looking at these targets, they increased mandates for Burnaby, Coquitlam, Courtenay, Langley, Langford, Penticton, Pitt Meadows, Richmond, Squamish, and Vernon. So in the Okanagan here, Penticton and Vernon are going to be the main ones that we're really going to focus on. And just under 40,000 homes it's set to do. So when we're looking at this is a really strong need on it. But what it's really doing is taking away and creating the type of housing that we actually need to live in. I think this is going to be something we look back on in 10, 20, 30 years. And yes, we're adding more supply to the market, but we're not doing anything to add affordable or the type of housing that we want. Who wants to live in shoebox apartments and raise a family? Consumers' habits are changing. Not everybody wants to live in a downtown condo. I mean, if you live in Vancouver, that might be a good opportunity because, well, it's Vancouver. But if you're looking at, say, Kelowna or other centers that are still really a driving city, and you need a vehicle to get in and around, is it going to do anything good to build additional housing like that? I think this is a little bit short-sighted. We're adding more housing, but a lot of the new housing is all in rentals right now. When you're looking at it, we're also not creating affordable housing because most of the stock is going to rentals.